Hello and welcome to another market review for the month of July. And at the same time, I'm going to look at what the future have for the market as we have crossed into the new month of August. And here we're going to contact the technical patterns and at the same time the fundamentals that are coming to the market, knowing the impact of earnings on price. I will tell you that on the long run, on the short run, the factors that drive prices include earnings. And I say that earnings contribute about 20% of forces or impact on equity prices. These are why we are going to look at these technical chart patterns and the fundamentals released so far to the market, how it's going to reshape the market going forward into the quarter and into the year, because the numbers that are coming now is revealing a lot of things to investors. But before we go further, we want to look at the market data for the month under review. For the month under review, a NSE All Share Index, which is a ASI, opened the month at 24,479.16 point and close the month under review, which is the month of July, at 24,693.73 points. That means within this period, the index gained 214.57 points, representing 0.88% up. And this time, the chart pattern is revealing that the market here is resisting resistant, and we can see the pattern of the chart or the candlestick, if what I'll call it here, is a sign that the market is about to look up. It's a sign of reversal. And after profit takers have took profit in the month of June, which is the last month or the first half of the year. Now the second half of the year, the first month, is resisting further decline, and not only that, there are some factors also contributing to this market getting us this candlestick pattern we are seeing. Even when the market has tried to go down, it resists further and close up. It's a good thing for the market. If you look at the market, touched as high as within the period as high as 24,783.61 within the month, and low of 23,961.14. It tells you that the market really resisted what decline within this period, but it's telling you that the market is going somewhere. And within the period, I also tell you that about 23 equities gain for the period. That means they move above the price they open the month. And while 71 stocks were on the down, that means the market on its own has what we call a negative breadth for the period. But other technical indicators will also meet for the period, because if you see the period, also we are seeing improved buying strength within the market for that same period. And also, if you want to look at out of the 21 trading days within this period, that we had 2 days, that is on 30th and 31st as public holiday. But within the 21 trading days, market was up for nine sessions and down for 12 trading days. This tells you that you see a mixed performance here. But good thing that also, if you look at your Fibonacci retracement here, so that the market is resisting to break down this 38.2%. It tells you this is strong Fibonacci. Anything above here is a sign of anything down here also break down. See, when the market in the month of March, you can see it broke even from almost broke both 50, 25, 20, 38 to down 25, almost getting to before the market rebounded in April. You can see that this market is resisting further decline seriously at this point. What does it tell you? It tells you that the market might likely rebound quickly as expected. Seeing the numbers that have released so far in the market, the buying pattern is also changing. That's why I say we're looking at the technical patterns, and at the same time, what in the future are more other things to look at in this discussion. But from what I'm seeing now and what I'm explaining to you, you can look at this candlestick formation. This is a sign of reversal already, and it tells you that this market is likely to break out this, bearish channel that is around here. If you go to another chart, let me open this chart for you for us to have a look. If you look at this pattern here, seriously, you can look at the same pattern I've showed you in other chart. You see that the market is on the downtrend, but attempted to rebound, but taking down within this same channel for how long? For since 2001. If you can look at this date here, let's put it here. This is from 2018 January. You can see after that big rally in 2018 January, which repeated itself this year also, and also in 2009 on the month of January. But you can see that it has been on a downtrend. That means for almost 3 years the market has been attempt to what we're seeing now. The market might likely come out of this a bearish channel. Look at where the market is now. If as we enter into the month of August, we expect post-flow reshuffling, looking at the strength of earnings that have hit the market so far, that will tell you that we expect a lot of volatility in this month of August. Why? Because investors will be positioning their product. They will say that is the importance of earnings, and I believe that those that had a earnings season videos as understood what I'm saying vividly, and at the same time they have taken advantage of the market, looking at what is happening now, because you are to take the next step from all the figures you have seen so far, which I explained in that video how you can use these numbers to take advantage of the market. Yes, these numbers now, as they are coming out, there are other factors that we are looking that is going to influence the market positively going forward from here. Yes, about I will tell you the number of surprises and the earnings that are released so far. It's on the high side. I will tell you, despite that, yes, the market moved towards the expectation of many companies to post the negative or decline. The reverse was the case here. This missed number not only came as a surprise. Many companies that you were thinking that they were not going to post positive number did, in line with their sector, in line with the market expectation for those ones. But there are some surprise that you didn't expect these companies to do well or to post, but number that came out from them tells you that going forward, especially ahead of the third quarter, we should expect a better number also, because the market in the economy in the month of April, May was a bit down because of the lockdown, and around May, towards the end of May, the third week of May, activities resumed. It's only in June that they have full activities for that second quarter. On the whole, the first half of the year, their numbers are looking good and better, and give you insight what to expect at the end of the year. Yes, the financial sector result also was missed, but I'll tell you, from what I'm seeing from the financial sector, the result from that financial sector is not bad as expected. People were thinking that, yes, I was one of them thinking that, but the numbers actually know that it's not as bad as expected. That means it's a sign or indicator that the market recovering going forward will come faster. Not only that, I told you earlier before this video that inflation is already hitting some investment window, and the only way you can hedge against this inflation is in this equity market. And the way it is going, factors that are promoting or propelling inflation are still intact. They have not been resolved. For that, we expect that inflation is likely to hit 13.20 or 13.25. This, when it got to that level, I'm telling you, investors in other windows will be struggling, because it has put your return on pure negative, and that will threaten those investment windows. But for those in equity and those companies that are growing their earnings, and as they grow their earnings, their prices are going up, even there is inflation, because the prices are going up and they are growing their earnings to support the price, you are not afraid of inflation, because your money is intact. But if your money is in a fixed deposit where we are expecting to earn 6%, 7%, and inflation is around 30%, 12%, you know what it is. Even when it matures, the value of your money are also depreciated at that particular time. Also, if you look at the treasury bill, as I've said, look at the 2.9 is good, and this low interest rate in the money market or in the environment we are now is also good for the equity market. That's why, as an investor, sit down, get your strategy, Learn how to take advantage of this movement, because I tell you that if you remember in the first video I released, that was around March, April, during the lockdown, that there are some defensive stock that you should position. Those defensive stock, as we speak now, if you are in those stocks, you have not lost a dime from your investment. Rather, you have made profit. That means for defending. And for those stocks that are going to lead recovery, you can see that they are already coming out. We're still looking at their second quarter result, their full year, half year result. Those stocks that are going to lead recovery going forward are already showing face. That means you need to also get that video to know all these stocks and position. But I'm telling you, at the end of this discussion, there's a hot list of stocks that after we have seen all the results released so far in the market, these numbers were what would I say? If I say it was overwhelming, because the number of results released within the holiday just for the companies to meet the deadline or something else. We have to work day and night to compile those numbers. Not only that, we have taken time to look at those numbers and technical situation of those companies, where it is now, if it is where you should go in or not. Those hot list of stocks also will be released to the membership site. That is the Buy and Sell Signal group. If you are not there, I think this is the time you should subscribe and get those stocks. And also try also get the videos on that first talk, the first video that we did in March and early April. If you don't have that video, also you need to the earnings, mastering earnings, so that video you should look at. If you have these materials, I'm telling you, you are prepared for the next bull run and you're going to make money. You need to get information. You need to educate yourself. Even when things in the market are happening like this, at times I tell you that in a situation when things are bad, there is where opportunity are created for those that are designing, those that are trying to see opportunity in the market. For me, this is not the time to run away from equity market, but rather look at your own strategies and also share with people that are in the market. Before you know it, you are up there. If you look at this strong resistance level here, we are seeing this green line. It's a strong resistance level. Even when the market broke down, it didn't last, it come up. But when you see that around this May, June, the market was still within that strong resistance level. A breakout that we are seeing this formation of this candlestick here will also tell you that the market, any breakout at this point, market is going to go up. And we are seeing that the earnings have come so far are likely to reshape the market, give direction, and also quicken market recovery. That is what I'm telling you at this point. And liquidity is likely to also flow the way of what? The way of equity now. Equity assets. Or ask me why. Now that they are injecting funds into the economy, we expect that these funds will start imparting activities of different sectors, the critical sector they have invested, they injected this fund into. Especially look at the results that are coming from the healthcare sector. You can see that they are on the upside. They are not a number. I would say they are disappointing number. Healthcare sector number are still okay. Look at numbers from Nimet. That number alone shows you where the company is going. Number from what? From fixing. Look at number. That's why you need to also get to those hot lists and know what to do between now and end of the year. Especially those companies that has September as year end, those that has May as year end. Where are they going? You need to also look at their financial position. That is why you need to get their end and see if this company within the value area in technical analysis. Once you know they are there, what level are they about to break out, or they are resisting to go further down? That means if the number comes, it's going to turn up, or if they are at the resistance level, when number comes, it's going to break out. These are the things you should do. Go to technical analysis, get that video and watch it, and look at where the company is at now. Are they within the value area? You should know. Once they are there, you should know the kind of decision you should take, and which the video also guide you the next step you need to take. On that note, I've explained what factors are likely to what we're going to see in the future, and also the technical indicators as we speak now, or technical tools also support reversal as we speak. If you look at this candlestick at the same time, also if you look at this trend lines here up and down, see there's a sign that any breakout of this one is an up market. That means technically we are seeing that the market is looking up, is giving a sign to look up, fine. And at the same time, fundamentals are coming. These fundamentals are likely also to support the market. You know what we saw in the month of May and June, April, May, June, that the market was on the upside, outside what? The economic reality, outside economic fundamental. It was really a disconnection. But now we're expecting that any market that is going to recover now with injection of funds, low interest regime in the market, and at the same time high inflation rate that is also rubbing on many investment window. And those factors that are going to impact on inflation are still not giving way. They are still intact there, especially the devaluation of naira is still there. The high cost of transportation, insecurity that farmers are not in the farm, they are still there. Infrastructure to move all these things. For that, inflation will remain in the upside. And there is nothing we can do. And also, look at what happened the last MPC. The CBN, the CBN Monetary Policy Committee, want to watch. They want to see how this thing will adjust itself. But I'm telling you, the way it's going, interest rates and the inflation will still be on this same direction. As far as the inflation has moved ahead of interest rate, CBN has no choice. If it goes further again, they will have to adjust what interest rate up a little. But as we speak now, let's see what is going on. That means as we are going into the new month, you need to know where you should pitch your tent. That is why you need to have access to these hot stocks that now I've seen the number, because I'm telling you, a lot of people in the market in different quarter, we are expecting that these numbers will going to be as bad as not what we have not seen before. But I'm telling you that the thing is in another direction, that the result came with surprises. On that note, I see that funds will start looking towards the market. You at this point, you need to know what to do, and that's why I said, is the stock market about to turn? You need to know. If it's about to not, where are you? You need to start jumping into those goods. That's why you need to also be in the buy and sell signal group, so that you can have access to that hot stocks. Even though you're a long-term investor, you are a daily trader, you are a weekly trader, 6 months trader, long-term, those stocks are available already, because we have made available those stocks that you can pick. And for weekly traders, we are giving you your buy range, we are giving you stop loss, we are giving you the profit target, and reason why we are buying it, and those stocks to hold. If you are a weekly trader, if you have entered early and those stocks have not moved, we can still hold them, and those stocks that you should sell off immediately. And that's why in that hot list you can see group of stocks that you should sell immediately. In that hot list you can also see group of stocks you should watch, the group of stocks you should just hold, and those stocks you should start entering immediately, even as the market is opening this morning. You need to jump into those stocks. Why? Because that is where you can make fortune going forward. Even the pandemic has not affected these companies' performance, and because they have survived this half year, the possibility of this company are going to survive the second half. At the end of the second half is very, very high. For me, you need to take advantage of that hot list and position right now. If you are not a subscriber, it's the time for you to subscribe. And if you want to subscribe, the number of people to call is on the screen. You can just go ahead and call them. They will give you information on how to go about it. And that is all for the patterns and the technical tools we are discussing. But if you want to look at the numbers that have come so far, I will tell you that numbers from the healthcare sector, as I've said earlier, they are fantastic. From agriculture sector, or we call agribusiness sector, is something else. Those numbers, they say that this sector, before now, I know they are enjoying single digit interest rate incentive from government, but now with this pandemic, that they haven't having about 5%, moving from 9 to 5% is better for them. That is going to reflect. And also look at their financial cost. Their finance costs have dropped. Within this period, they'll tell you that they're coming, not only their top line and their bottom line. I told you these are the things that you want to look, whether a company earnings is a quality one or a growth one. You need to know all this. When you know this, it's going to look at their profit margin. Also look at what they are operating, cash flow, the operating platform. Where is it? Is it looking up and looking down? I will tell you, numbers from this agro business are impressive. And also, if you look at you need to know the right time to buy these stocks. That's why I always tell people that if you are following me, that you should have a watch list. In your watch list, your fundamentals are good, but technical will tell you the right time to buy the stock. Is it the right time to buy now? Are they within the buy range? You need to know. That's why you need to also be in that group to at the buy range and the exit price if you're a trader. But if you're a long-term investor, you see those stocks and know when exactly to take position on those in those stocks is very key. Also, if you look at the banking sector, the ones that have come so far, I will tell you their mixed number, and not only that, the ones that were expecting to have perform well, when they've done well, you can see numbers from those sectors. Also, if you look at the way of the food and beverages, I will tell you those numbers there are really disappointing. If you are following me, I've said it for a long time, and that is how to know whether the economy is doing well or not, especially the purchasing power of people. You can see that sector numbers reflected what has happened in the past quarter, where there was lockdown. That's why the initial panic buying that move price, but then after then people have lost their job, earnings have dropped, and all that. It's also reflecting that those companies, most of their goods are on the shelf of their distributors or their sales outlets. For that, you need to also look at and change your strategy. Also, you look the way of the oil sector. The oil sector, both those that are in crude and those that are in marketing, they are all suffering the low price oil and the crude oil price oscillation. You also look at, and not only that, the consumption of these oils, even those that are into marketing, has dropped. The movement has been restricted for this while, and when people are not consuming, they are not consuming. Then where are they going to make say? These are factors that affected that. That's why you need to watch some stock in that. That's why if you log into to see those hot stock, there are some stock that you should watch and keep your eye to them to see if they have touched their support level and they were about to turn back. That's why you need to look at the airline sector or the service sector. Their numbers are also equally missed to reflect the activities of also the pandemic, knowing that the airline related businesses and the airline were almost down for like 4 months or 3 months, more about 4 months now. That also affected them. Knowing that now that they are open that sector, we expect that activities will grow. But you also know that the cost of flight also has increased. That means traffic more likely to come down because of the high cost. But the high cost also is expected also to impact on their performance, on their profit, if people continue, because they factor in the cost of social distance in their fare and other stuff. But if they can maintain it, they are not moving. I think also it's another way to manage their cost. We are likely to see improvement in that sector. But I'll tell you that numbers that came from other sectors that I've mentioned earlier, you can also look at numbers from the telecommunication. That sector is highly capital intensive sector, that a lot of things happen. But the number that came from MTN, yes, it's a missed number. The one that came from Airtel before now was missed. But I'll tell you, there's a lot of potential in that sector. As far as there is this reset in the economy globally, and here I'm telling you that sector is real, because the consumption of data meeting online has really increased, and that is going to impact on their bottom line. You can see, despite there's a margin decline in MTN, earnings, but they still go ahead to give you a good dividend that going forward, into the rest of the year, you expect a better number. And this company now, because they know the capacity and they know the potential of the sector, they're also investing to expand their capacity, also investing to make sure that they serve you well. That, for me, you should make sure that your portfolio is diversified, and that's why I will tell you that sectorial rotation will continue, because sector that is not doing well, you have to move to another sector that is doing well, because I'll tell you that stocks are not wild that you can just hold. Where you see opportunity, you move. That's why if you are investor, will always if you are investor follower, or you are with us, you get information anytime we dish out through our videos, through our market updates, through any from our WhatsApp group. We'll continue to share what is happening to that. It will guide you to take informed decision. Yes, we want to still go back to the market data. I will tell you that for the month of July, that Ikeja Hotel led the top gainers for the period, gaining 17.89%. The price moved from 95 kobo to 1 naira, 12 kobo. I will tell you, this is just pure market sentiment. Knowing that this sector during this period, we also in a lockdown, there was no lot of activities. I will tell you, this pure market sentiment. We have not seen their half-year result to see their position, but I will tell you, this is what moved and this is what they gained for the period. Yes, Unity Bank was next on that table, gaining also 15.09%, moving from 53 kobo to 61 kobo. Purely market sentiment. This is a bank, I will tell you, if you're a trader, take advantage of this movement, but for long-term investor, you should look away from this kind of stock, because it's a stock that has a lot of, high, on a high, what we call negative shareholders fund. for me, you need to be very careful if you are investing in this stock. You can take advantage of the low price. The next one was Ado company, which is former Fort Oil. You can see this also, it was among the top gainers, moved from 11 naira 75 kobo to 13.45, gaining 14.7%. Yes, I will tell you, pure this is what market sentiment. The number that came out shows that this company also is among those companies that posted numbers for me that is not impressive, that you need to also take decision. If you are there, if you are make short-term profit, you should know what I mean. You should start taking off. But stock like UCAP has also represented on the top gainers for the month, moving from 2 naira 56 kobo to 287 kobo. That's about 12.11, which is okay for me. This company number from a half year tells you where they are going. It's a pointer. It's an insight. It are giving me an insight where they are going for me. If you are those that want to really make 12% and above for the year, which is far above what your bond will give you or what your money market instrument will give, especially the treasury bill. These are stock that, if you look at the number of this company for this period, it's a number that one can say yes. That also the next one there is Dangote Cement, moved from 128 naira to 141 within the month under review, and that gives you about 10.78% return within that short period. I'm telling you, you are good to go. Then if you can make 10 point something percent in a month, than waiting for you to make 2.98% in a year in treasury bill, you should know where you should be now as an investor. What is the next step you should take? No, every investor is in the market to make money. We are not there to watch or to enjoy the up and down. We are there to make money. You can take advantage of this making money. That's why complete portfolio reshuffling is expected in this new month of August. Why? Those in money market instruments also know that they should have to move to some equities, especially now that the end of the year is around the corner. We're already at the 8th month of the year. If you are taking position between now and the next 6 months, between now and the next 7 months, it's better that we are going to expect that there are some companies that are going to give you a dividend yield of 12%, 15%, 20%, 16%, depending on the price you are entering. That is better than going to wait for a whole year. If you are entering treasury, even if you are entering treasury before now, even if you are entering now, to wait for a whole year and get what? And get to point. Even the so-called the bond market is good for risk averse people, but also you are in the market to make money. That is why I said it earlier that this low interest environment or regime has put a lot of fund managers, investors, in tight corner, moving from here. That is why many of them are moving out of windows that they are not sure of what they are going to invest. Even when they are putting money, is under guess, because if you are investing in an environment where yourself that invest does not understand, and if you go back, who are going to hold, that is why you need to stay within the environment where you understand how you operate. That's why I always tell people, up your game in equity investment knowledge. If you learn more, you earn more. You need to also learn more on how this equity market operates, how to take advantage of a lot of information in this market, because in equity market, purely what we trade is information. And that information, if you know how to take advantage of it, I'm telling you, you grow your wealth with ease, with your eyes, focused, with relaxed mind. And then even like that, I will not tell you that in investing in equity market, there are bound to be losses, but let your winning games or winning side be more than your losses. And also, if you lose money in equity market, that's what we have started in Invest Data. We call it post-analysis, post-trade analysis. If you lose money in equity market, in any position you have taken, or you make money, sit down. When you have sold, you sold on profit. Sit down and say, how can I better this decision I made that gave me this money? And I will make more. If you can review this, it will go a long way to help you to become a better investor, a better trader. If you have lost money again, you sit down and say, why do I lose money? What decision do I take that made me to lose this money? If you can put these things together side by side, I'm telling you, you are good to go. Next on that line is Resta. I know Resta is one of the companies that we're expecting their full year result. It moved from 3 naira 23 kobo to 350, and within the period, I know Resta have touched as high as 380, before it came down to close at 3. At the end of the month, a return was 8.97 for that 1 month. These are the price movements for this stock within this period, and that tells you that as an investor, you need to also take advantage of those stocks that are on the losers chart and see if where you can, we'll call it momentum investing. You need to know where they are going for the period. If you also look at the losers chart or the decliners chart, you can see that the chart was topped by Ibeco company, lost 26.46%. He opened the period at 1 naira 89 and closed at 1 naira 39. That means the stock lost 26.46%. Next was Julius Vega. You saw their result, the release within the period. Not only that, since the stock was adjusted for a bonus of 145 and 2 naira dividend, it had been on the downtrend. Knowing that the first quarter too was not too good, second quarter came totally in red. But I see that it's a stock that one can still watch, because look at the support level and take advantage of this low price, because the stock bouncing back very soon is the possibility of bouncing back very soon is very, very high. You need to also look at it. The next on that list is and Julius Berger lost 24.43% for the month. Next on that line, on that table is Len Africa. Len Africa opened at 1 naira 29 kobo and closed at 1.01. And I tell you, this is stock that you should also look the way of this stock because of their year end. Next there was Unilever. Unilever opened at 15 naira 30 kobo and closed at 12 naira 15 kobo, losing 19.93. Next on there was Steplat, Cornoyer, International Brewery, Berger Paints, NACO, and USA Property. These are the top losers for the month under review. But I'm telling you that the future for the market is becoming brighter, and direction is becoming a bit clearer for investors. Since we have seen the half-year results, now is for you to take action. That's why I said earlier that volatility in this month will be high, because people will be moving from one stock to another. They said even at loss, some jumping on. That means you see price of stock going up, and funds are likely also to look the way of this man. Don't forget that also the foreign investor also seen that our market is really undervalued. Now see that the companies in this market are posting a resisting decline in terms of bad number. Not only that, chart have also reviewed that the market is resisting this time on a monthly chart, on a monthly chart time frame. That tells you that we are likely to see an up market in the month of August. And you know that third quarter also is very important in equity investment. At the end of this quarter, we'll be seeing the results in October. We also expect what to do. That will give you where you should finally, but from what we're seeing now, you should know where the market is going and how to position if you're a long-term investor. I told you earlier in the last video that we expect a long bull run in the year 2001, 2002, depending how the global economy handle this recession. Now that vaccine is already, it's on that way, discovering almost vaccine here and there. That's why the high cost of it at this initiative, we expect that going forward, the price of the vaccine will come down. That also reduce fear. And see, most nations are opening their economy more now, because vaccine is there, and they are putting measures to control the spread. Some are still locking down, but some are open, widening up. Here in Nigeria, I think we are adjusting to make sure that everything start working normally, because we have seen what we have lost during the lockdown. Yes, we thank God we're able to also to save life. That's why the increasing number of cases we are seeing now, because of increasing tests that we're also seeing. But we believe that with the measure put in place, we can also curtail it and let us as Nigerians also know where to start home and when to be on the road. Also, you should apply and follow all the rules from the federal government and the state and the local government. And I know that if we can go a long way to advise people around us how to stay safe. Once they do that, the spread will also naturally come down. Before we know it, we are back to our full economic year. We are still coming up gradually. I think schools will likely to resume, especially those that are writing exam. Churches are likely to open. Activities will come in here and there. Business, the eateries are likely to when these things are coming back, the hotels are likely to come back. These are the things that also start changing the economic activities in the second half, going forward into the last quarter of the year. We expect that the market should move in that direction, all things being equal. But as an investor, you keep your eye in the market. See you, and God bless you.